What an incredible day for silver traders, and especially gold and platinum traders. Platinum is up around 10%, silver is up around, it was 11%, but now I think it's down to 8%, and gold hit another 1.1%. Now, I'm going to tie this into your Mega 7, and I'm going to go over the Mega 7 charts also, but I kind of just wanted to start out with this. The reason why this is popping off, because if you don't understand, I talk about it once in a while, especially with natural resources. There are some resources that move with the market. There are some resources that move against the market. And if you're trading one of these, you need to be very, very careful. Now, if you're saying that silver and gold are going to drop really soon, and you're one of those guys saying, oh, that's going to drop really soon, but the Mega 7 and the triple Qs are going into new highs, you're not learning how to trade yet. That is counterproductive, because if you don't understand, guys, I'm telling you, from losing a ton of money in gold, definitely. That's why I'll never touch another resource ever. It is super hard to trade these. Now, if you're a long-term viewer or a trader or whatever like that, you like to do, buy shares or something like that, that's more like what you can do. Or it's the same thing as gold. So when at the bottom of bear markets, you buy gold, you hold it, you run it through the bear market or the bull market, and then you can triple your money. It's the same thing. It's just physical, different ways to trade. But if you're trading one of these resources, you need to be very careful, because I go over this once in a while, and I'll just do this before I go over the Mega 7 charts and a lot of the indexes. But if you are trading gold, or let's actually start off with gold because it'll be a little bit more clear. So if you're trading these resources, gold, platinum, silver, they move with the market usually. If you are trading them, you need to be very careful. Now, if you're a trader, like I said, saying, hey, the market's going to go, or the gold is going to crash really soon, but if you're saying the triple Qs is going to go up even more, you probably don't know how to trade. Because if you don't know, these move together. Let's pull up the triple Qs really quick, and I'll show you really quick if it'll load. So as you can see, it's kind of not like down to the 1 minute time frame. It's mostly a overall. Silver, gold, and platinum have made a really slow, it's like small cap coins. I talk about once in a while usually too. The market will start to pump really hard, and sometimes these coins can trade sideways for a while and then actually start taking off. And that's where you're getting a lot of action in gold and a lot of action in silver and platinum. Now, on the back end though, there's other resources that go against the market. So when the market goes up, you'll see usually those stocks drop. Oil is a perfect example of that. When the market recession comes, usually you'll get a really hard spike. Back in 2022, when it hit $130 a barrel, where were we in the triple Qs? Bottom of the bear market, right? So, and just be very careful. I know a lot of people, especially trading oil, well, that's not what I read or Tommy Lee said. Well, follow Tommy Lee then. Just go ahead. I mean, I imagine he's just incredibly right, saying Bitcoin is going to go to 350,000. I guess the triple Qs is going to 900 in 2 months, right? So, but just be very careful, guys. If you are trying to short these, I'm going to just throw this out there, just like the Mega 7 charts I talk about all the time in the indexes. If you are going to trade these, now the bad thing is a lot of people do not know when to short. They just, well, it's going to burst. So if you're trying to aim for like a short or anything like this, you need to make sure you're paying attention to the 10 and 20 moving average, especially the 10 moving average, because it will hover around that. Now you might get a simple rejection like this where it pushes up and then goes down to that 10 or the 20 moving average and finds support and consolidate. And that's what you need to worry about like this on silver, gold, or platinum, anything like that. Because if that does happen, you're really going to see like a consolidation in between these two. So like right here, drop, consolidate, and then just trade sideways for ever. So just be very careful. But you want to look for that break. If you know the top is going to break, it's going to break that 10 moving average. Same thing as your Mega 7 charts. But just wanted to go over this a little bit because I know there's a lot of people probably going to get destroyed from this. And I just hope that, something like that can simple knowledge can help you out. So let's get into the Mega 7 because, we've rallied so much or dropped so hard this week. Honestly, it was so boring, which I get it. Every single year, it is like this. It is just slow consolidation. So let's actually go to the charts. Oh, there's actually one I wanted to show you. Did anyone watch Tesla today? Yeah, Tesla broke its 10 moving average. Woo! There we go, guys. The bears are taking control of Tesla, so be very careful. You need to start adding these numbers up. When you hit around 35%, it is going to be a full bear swing. And Apple is going to come up right behind that. But this is where it gets tricky. And this is where my viewers need to learn this too. So if you have a lot of the Mega 7 either under their 10 moving average or a moving average, and you have like this one big powerhouse mega 7 called NVDA, right? NVDA did have a really good push. So NVDA's next support, if it does reject, which if all of these other stocks are starting to break their 10 and 20 moving average, you're going to see a rejection. And then you're going to see NVDA come up behind them and slap them. So around probably let's see, what was that date, 24th? So right around here to there, this kind of like space right here, this is around $6-7 on the triple Qs. So if a lot of these mega 7 are going to reject, this is definitely going to help push them past their moving averages or breaking their moving averages. So be very careful. Keep an eye on this. You do have a first support on NVDA around 186. But let's look at the Tesla chart, or let's start with just the basic. Let's start off with triple QE, right? Because I think that would probably be something that you would want to see. Now on the triple QE chart, the equal weight of the mega 7, all in just combined equal weight. Now you can see how the 10 and the 20 is coming in for a cross. That 20 is going to get above, that 10 is going to get to below, and that means full bears are in the swing of this trade, or trades, or whatever you want to trade in the mega 7. But just be very careful, because this is a early sign saying, hey, next week could be something really powerful coming in. Now I do see in the market probably going down to around probably 600 in the triple Qs. I wouldn't say right off the back 550, but it's probably going to play that in the long run, and I'll show you why in a second. But if the triple Qs does break this 10 moving average, or the triple QE, that equal weight is really going to come into play. And that's where I'm talking about NVDA coming up behind all of these stocks like Tesla, Apple, and Apple almost broke this week also. I'll show you that chart next. But right here, this really is just consolidation. We've been trading sideways since around the 21st-ish. So, I mean, if you're an older trader, there's really no trading during Christmas. It's really boring, honestly. But let's actually look at Apple, because this is something that you need to see also. Apple made a lower, almost broke, honestly. It almost broke. It was saved by Thursday on the 18th when NVDA started pumping. That's what really saved Apple from just breaking that 50 moving average and just going ahead and dropping down to 255. But you can see how the 10, it's hitting the 10, and the 20 is crossing. Bears are in full control of Apple. So what I'm saying is also be very careful, because on the day chart, which is honestly not hard to see, it is at the top of the channel, guys. It's been floating there. It's about to break. It's about to break that 50 moving average. And if it does, this top is definitely going to give out. And you're going to add up these numbers also. So Tesla, Apple breaking, and then let's go to AVGO, right? So AVGO, let's go into a closer time frame, not the day time frame. Let's pull up the moving averages. Where is it? It's sitting right above its 10 moving average, but bears are in control. You can see the 10 or the 20 moving average. And like I said, if NVDA makes a simple rejection to that moving average, this is definitely going to force it. Right here, this is when NVDA started taking off, this date. Around the 22nd, 19th, or 20th, whatever that Monday was. Yeah, the 22nd. That 22nd, that's when NVDA kind of made that push, and that's what really helped AVGO kind of push right above it. But if NVDA makes a rejection, this is going to break that 100 moving average, and it's going to start heading down to that 200 moving average. I can tell you that right now. Let's actually look at Google's chart also. You can see bears are in control. The 10 is under the 20 moving average, and the bears are taking a lot of control of these mega 7s, so be very careful. Does that mean a stock market crash tomorrow? No, it doesn't mean a stock market crash. It just means your next moving averages are going to get played. And by the way, I have to say this because I feel like I have to. If I'm reading these moving averages, these supports off, don't play puts past these guys. Like, there's a reason why, Jimmy, they're really cheap down here at 230 in Google, because it's unrealistic. Play a realistic support. So 293 is going to be your first support. If NVDA, Apple, Tesla reject, you're going to see Google make another leg lower to around 293. And then let's check out Meta, right? Meta is just fighting to stay alive, honestly. This is really coming into play. I think this was around when NVDA started taking off. NVDA kind of pushed it up to that next moving average, and it just rejected it, and it's really consolidating. But you can see the cross coming in where the bears are taking control now. There's really no space telling you that the bears are in, or the bulls are in full swing. So the bears are finally taking control of this. You'll start to see the cross probably next week. And then if NVDA does make a cross or a reject, and Apple rejects, Tesla rejects, Google rejects, AVGO rejects, this is definitely going to make another leg lower over time. Let's look at Amazon. I think Amazon, yeah. So with Amazon's little push, you can see this right here around this date, around the 22nd. This is NVDA's push. This is what really helped Amazon push. Now, if NVDA makes a rejection just down to that moving average, NVDA is going to blow past all these moving averages. I can tell you that right now. So just be very careful, because if it does blow past that 10 moving average, it is definitely going to go down to that 200 moving average around 216. Tomorrow, no. Over time, yes. Now with AMD stock, you can see this also. Around the 22nd Monday where NVDA made that push, it made AMD push up to its 10 moving average, sitting right on that 20 moving average. As you can see, it's just been coming as a support right here. You can just see it just floating, consolidating all the way through the holidays, which was super annoying. But just be very careful. The 10 is below the 20 moving average. Bears are still in control. Just because it's above the moving average doesn't mean the bulls are in control. So if the market does make a rejection, just a simple rejection, honestly, not even kidding, probably like 610 in the triple Qs, you will see AMD start making its way down to its 100 moving average around 201. And by the way, guys, if all of these moving averages are going down to the 100 moving average, that is kind of telling you where the triple Qs is probably going to go within a week. Now, Microsoft is going down to its 200 moving average. It already broke its channel from that April low. So it's just making lower lows, just fighting. But really, if you look at this moving average, this 200 moving average, it's the exact same thing as the triple Qs. Like you see this 100 moving average, see how it's kind of like the same, it's just that direction. It's the same thing. It's just a different moving average. But here's the thing with Microsoft. There's no supports under that 200 moving average. So if we do go to 590 in the triple Qs, it's going to break that 200 moving average and start heading down into these lower supports. But there's just a void. There's really no supports until 402. And Microsoft is huge. Where's Microsoft? Yeah, Microsoft is still huge. It just hasn't been really doing anything because we've just been really floating around 610, 600, 620 in the triple Qs for a while. This is around 620 in the triple Qs, 600. This is what that consolidation is. So if we start heading down to, say, 590, it is definitely going to break that 200 moving average. So just be very careful with this next week. Now, but the SP 500 made all-time highs. We're going higher in the market. It's just crazy. Just be really careful, Jimmy, because honestly, we're hitting this bottom, this old support of this uptrend. Let me see if I can pull it up to the right time frame. So I talk about it. If you can, I mean, heck, you can even go back in my old videos and look. I was calling out 590 something, 9597 in the triple Qs. We hit that, but be very careful because even if you go back in my old videos, I talk about it all the time. When you break a upward bullish trend, for some reason, it always comes back and retests it, and it rides that support as a resistance. The SP 500, once again, same thing when I was calling right here. This is a resistance. This is a resistance. Watch out. And then we consolidated forever for a month, and then it just pushed back up. That's another resistance for the SP 500. But I'm going to tell you right now, if the SP 500 rejects next week and starts pushing down to this 50 moving average right here, that is around 600 in the triple Qs. It's really not going to be hard at all. So, but just kind of want to touch base with you guys because honestly, I do see us going to probably around this moving average right here, this green one, this 100 moving average around 600. Now, I'm going to warn you right now, if you're a all-time bull bear player, that's who's probably going to win right now, is probably being a bull and a bear. You can't really be a bear yet until you start seeing those moving averages get broken on the Mega 7 and start heading down into the low end, like this big gap. If you go look at the Mega 7, there's always that really low moving average. Now, if a lot of these Mega 7s start breaking their 100 moving average or going down to their 200 moving average, we'll go to 550. But what I really see for this upcoming like week and a half or two, is you're probably going to test that again. It's probably going to come up and hit those moving averages, and then you'll probably see a rejection later on, probably into early February, something like that. But not financial advice, the whole entire video. I love you guys. I hope you guys had a wonderful Christmas. New Year's is on Wednesday. New Year's Eve is on Tuesday. Don't drink and drive.